Hello, welcome to my YouTube channel. I am Xavier Smith, and today I'm going to teach you literally everything you need to know to start investing. Because you hear all the time, you should start investing early, but no one shows you how to do it. And even the videos I've seen of people trying to show you how to do it, they don't show you. They just tell you, this is like, buy this. But you're like, I don't have an account. I have no plan. How do I do this? So today I'm actually going to show you from step one of making an investment plan to making an account, like picking out a site, making an account, and then getting your first investment, and then actually coming up with your future strategies, and then deciding what type of investor you are. If you're a longer term, like lower risk, lower reward, or if you're like an individual stock investor, options type thing. Okay, so let's hop into it. It's going to be a long video. So enjoy. All right, so the first step is super important. You're going to make an investment plan. So grab yourself a notebook, grab yourself a pen, and basically what you're going to do is write investment plan at the top, underline it, do whatever. And you're basically like, to start, it doesn't have to be too detailed. You can just say, what risks am I willing to take? Like, do I want my money to be super safe? Am I like going to be going for the long term? Because safe money in the short term, if it's like a 1 year thing, you probably want to just put it in a savings account and you're not going to get much interest off of it. But if you're going longer term and you want to be low risk, you would be going more towards ETFs or index funds like the S&P 500. And if you're willing to take a little bit more risk, like medium risk, I would offer options to you, like selling options, not buying them. Buying them, you lose all your money. And then high risk, you could be going individual stocks, like without any backstops to it, and like crypto, which I wouldn't advise, and buying options. Then your strategy. If your strategy is just low risk, long term, you're going to say, okay, I'm just buying ETFs, right? And I'm going to invest $20 a day or like 100 a month, right? Something like that into the same, and just put down $100 a month into S&P 500. First, just get your notebook, like really get a notebook and write down what risk you are willing to take. Just say risk level, like low, medium, high, because again, the higher the risk, the higher the possible reward, but the higher chance you'll lose all your money. There is always risk in the stock market, so it's not a guarantee that you're going to make money. You could always lose your money in the stock market. So after you have your investment plan done, you are basically just going to pick out a platform you would like to use. You might know Charles Schwab. That's a good one. Robinhood is a great one for new investors, but if you are under the age of 18, you cannot have your own account. And then there's Fidelity, which I use Fidelity and Robinhood. My dad uses Schwab. There's multiple other, like there's many other sites you could use, but I'd recommend those three, probably more Robinhood and Schwab. Fidelity's not as good, but Fidelity and Schwab do have accounts for minors. So basically, you're just going to have your parents set those up. It'll be in your parents' name until you turn 18, and then it'll switch over to your name. Or you can just set up an account in like Robinhood, Schwab, or Fidelity in your own name if you're 18 or older. So let's get right into that process. And I'm going to do Robinhood because I like Robinhood and I think it's great for beginners. All right, so first thing you're going to do, you can do this on mobile just going to the App Store. I'm going to set my Robinhood account up on PC. So you can basically just say Robinhood like account set up, right? Or you can go to the app online, well, the app on iPhone or iOS. Here, I'm just going to press sign up. Then you're going to put in your first and last name, your email address, and your password. So I'm going to quickly skip through this and show you the next step. All right, and then next, what you're going to be doing is after you put in your information, you're going to put in your phone number, where you live, of course, because you just put in where you live, city, state, zip code. So I'm going to put this in, and then we can go to the next one. And then lastly, I believe you're just going to enter your social security number, date of birth, and then citizenship. And you should be done after that. If I do this, it won't let me make an account because I am under 18. Robinhood doesn't allow that. I can show you, if any of you guys want in the comments, how to actually set one up on like Fidelity or Schwab, where it is like a Roth IRA for minors or a transfer for minors, because I just had my parents set one up on Robinhood. So if you're under 18 and would like to set one up on Robinhood, then just have your parents set one up and it can roll over to your name once you're 18. And yeah, after this, you are going to want to set up, like link your bank account or your checking account or saving account to Robinhood. So let me see if I can see what that looks like. All right, so once you have your Robinhood account set up, you're probably going to get sent to this page here where it's just saying like investing. And what you're going to do is click on account, then go to transfers. This is how you're going to get money in your account. And it's like transfer money, whatever, whatever, whatever. What you're going to do is go down to linked accounts and then add new account. You're going to just click add new account. And then, of course, you can add your bank account or like a debit card. And then you can go up here. And I believe you can just transfer money off of that debit card or that bank account and put it straight into your account. And Robinhood's really good at sending this money over fast or letting you trade on margin while the money waits. And then you are free to start investing. All right, now that you have an account set up and you may have cash in it, or you may not have cash, it might have not moved over yet. You can come back to the video later, or you can just continue watching and do this in the future. So now you are going to actually pick out your investments. And this may seem overwhelming, but just look back at your investment plan, or if you didn't write it down, which again, I would say you should, just think about, are you low risk? Are you long-term investing? So if you are long-term investing, right, I would, of course, invest in the S&P 500. Clearly, it is at a new peak right now, and it could drop, but if you're not really worried about that, you're not worried about losing some money for the next couple of years and then it bouncing back, because it always has bounced back. And a lot of things in the US, like banks and the government, relies on the stock market going up. So it really can't fail. And if it does, that's horrible. But this is the safest you're going to get in the stock market. Other if you went like a bond ETF, but here you could buy in, or you could do, let's see, recurring investment. If you don't want to put all your money in first, recurring investment, you could say amount like $50, right? It starts today, and you could say, okay, this is every week. I'll put in $50. And basically, what that does is every week it will put $50 in no matter the price. So even if the market hits like a quick correction, your average buy-in will be lower than if you all bought in like at the peak here. It'll be lower, so when the market does come back, you'll be making more profit. And then this is also just a consistent way to be getting into the market. And I do say, if you are trying to make money in the long term, you're trying to retire, S&P 500, just do it. But if you are going to be a little more risky, right? There's a strategy I use called options trading. You would have to be approved for it on Robinhood, but this is a little more risky. It has to do with individual stocks, but if you could also do it with the S&P 500, and I'll show on the S&P 500. So I talk about this a lot on my channel, and I'll go over it quick here. But basically, you would sell an option, and like if you had enough money to do this, you can do it on an individual stock. If you had enough money, you could say, okay, I want to get into the S&P 500 anyways, right? And you have to buy 100 shares for this. But like selling a put would mean that they're going to pay you $3.20 to buy it at $595 on January 2nd. So in 4 days. So basically, they're going to just pay you to buy a stock at a price that you already wanted to buy the stock at. And this is great. You could do this with the S&P 500, and you could make pretty consistent gains, even just staying as consistent as the S&P 500. Because really, with selling these options, there is no way, like there's a way to lose money, but it's if the stock like it tanks dramatically. Like if the market tanked dramatically, you'd lose money on these options, but you'd lose the same amount of money if you just held the stock. And if the market tanks, you're holding the stock anyways. So you might as well take some extra premium, but you could do this on individual stocks. It makes stock investments a little less risky because you get paid to buy them. And then if you were going all in risky, you could go into individual stocks. But if you are going to do that, let me advise you, please do not just buy into like a stock that's super high like Nvidia. You could buy into something like Ford Motor that is at a good price, right? This looks like a decent price over time. And then it also has a dividend yield, 7.78. So 7.78% per year. So you'd actually be getting 7.78% per year just for holding onto the stock, which is like the 7% gain from the like stock market like yearly. If you just held Ford, you would be guaranteed that. You'd be guaranteed 8% a year. And really, the Ford dividend has been increasing over time. So you could get into a dividend stock, but I honestly would not recommend crypto. That is the thing I would not recommend. You could do it. I'm not saying don't do it. It's not financial advice, but it's a tip. I wouldn't do it, but a lot of people that want to get rich quick, right? When you tell someone 7% return per year can get you a millionaire in like 20 years, they're like, I don't want to be a millionaire in 20 years. I want to be a millionaire in 3 years. You're like, that's rough, right? They're starting with $500 and they want to have a million. And that's why people come to crypto, because it's easy to make money and it's so easy to lose all of it. So I would recommend, again, long-term investors, if you're just starting, do S&P 500 and just like invest over time into that. And then you can do a low-cost index fund, but just do S&P 500. Or people really like this VOO. I haven't really looked into it, the Vanguard S&P 500 ETF. So it's like the same thing, and you can just buy into it, right? And just say, okay, you could buy, or you could do recurring investment and put a certain amount of money in, like every month, every week, every whatever. And then that is really it. There's not too much more to investing. All you have to do is make an investment plan, find out what platform you'd like to use. Again, Robinhood's a good one if you're over 18 and a beginning investor. And then based on that plan, like what risk you're willing to take, you can decide what you want to get into. And usually for people that are just starting to invest, and most people always say S&P 500 is the safest, and yes, I agree with them. I sell options on them, and you can learn that in my other videos, but really S&P 500 is super safe. And if you just do a recurring investment and invest over time, you will make money in the future. It's fantastic how it works. Compound interest. It's all the good stuff. So this is really how you just start investing for beginners. Please let me know in the comments if I missed anything. Like if you guys are struggling at any point through this journey, because I can help with that. I really tried to make it so that now if you're a beginning investor, you know exactly what to do. You know how to set up an account, then like you know how to make an investment plan, set up an account, and then pick out a stock. And really the stock should just be an ETF for most of you. And if you do want to do individual stocks, I would suggest doing like paper trades. What they call is basically just download an app that's like a practice trader. Like I think my brother said Ninja Trader was a good one. And what you can do is it's the same stock market data, right? But you can trade like fake money and see what you would have earned. And I would say do that for individual stocks if you are thinking of going into it, because once you have real money, you can lose it fast. So you might as well practice and see if you're good at individual stocks before you actually invest in them. Okay, thank you guys so much for watching. If you found this video helpful, please like and subscribe. Yeah, I love you guys. Hope to see you guys again soon, and thanks for watching.